How do I invest for retirement? This is a common question from people who are approaching that big date. How do I build an investment portfolio that's going to support me for the next 20, 30, even 40 years throughout my retirement? And these decisions can be very stressful. After all, we only get one chance at retirement, so the costs of getting some of these decisions wrong can be significant in our retirement. Over the course of the next several weeks, I'm going to outline a framework that I use when building investment portfolios for retirees. We're going to talk about the objectives of retirement income investing. I'm going to talk about some of the risks and trade-offs that we need to think about as we're approaching those decisions. We're going to talk about different alternatives for building your investment portfolio. And throughout this series, I'm going to outline a number of different links and resources that you can use to further educate yourselves as you approach these decisions. And if we haven't met yet, my name is Mark Walhout. I run an investment advisory and financial planning business called Walhout Financial. I help people with retirement, and I created this channel to share ideas and concepts that I'm using to help people with retirement every single day. If you want to get more videos like these, consider subscribing to the channel and hitting the bell icon so that you're alerted when new videos are posted. If you like this video, consider giving it a thumbs up. And if you have any questions or comments, leave them below. I always enjoy getting your questions and feedback. It gives me really good ideas for videos that I can create in the future. So we're going to start at the very beginning, which is objectives. And this seems like a simple idea. What are the objectives as we're setting out to build a retirement portfolio? But you might be surprised that a lot of times when I meet with new clients or people that are reaching out to me asking about working with me as their advisor, oftentimes it doesn't really appear that there's a clear objective to the way that their portfolio is constructed. I think the simple objective that we all think about when we consider building our portfolio is just grow the portfolio. But the solution that we need to think about for a retirement investing portfolio may look a bit different than the portfolio that we've got as we're accumulating for retirement. So we're going to start with objectives, and to do that, I'm going to share my screen. We're going to talk through a couple visuals. So I think there's really two I would call them almost opposing forces as it relates to our objectives for building a retirement portfolio. So the first objective is to increase our income over the course of our retirement lifetime. And what we mean by that is that we want to be able to raise our income over our retirement period to keep up with the cost of inflation. And some of the best ways to think about or illustrate inflation is using a simple example. And I love this visual. It talks about the costs of milk over time. So in 1916, 9 cents could buy you a carton of milk. Fast forward 50 years, that same 9 cents only buys you a glass of milk. And in 2017, that same 9 cents only buys you a few spoonfuls of milk, I should say. So the power of inflation over time, that's something that we really need to consider or factor in when we're building a retirement portfolio. We want to own assets that will give us the opportunity to raise our income as we work through or live through, a 10, 20, 30, 40-year retirement. In some cases, we want to be able to raise our income throughout retirement. And then I would say the opposing force of that, on the one hand, we want to pursue risk so that we can own assets that have the chance to raise over time or increase over time so that we can increase our income. But we also need to think about the risks of having too much volatility, pursuing too much risk in that portfolio, and have that portfolio be depleted too rapidly as we work through retirement. So those are sort of the two opposing forces that we're working with as we construct portfolios. And this is a simple visual. I've talked about this concept on the channel before. It's my absolute favorite visual that I like to draw out just like this for people that I'm meeting for the first time when we're talking about investing. As we're working, as we're earning money and adding to our portfolios, this is us at the top of the ladder. We're adding money in the form of income that we're generating through work and are saving into our retirement bucket. And as we're going through that portion of our investing lifetime, we accept the fact that there's going to be volatility in our portfolio, but we can be sort of at peace with that because we know we're not living off that money. We know that we have more time between that period and when eventually we're going to retire. So we're okay to live with this volatility. And in that sense, the volatility does not pose a risk to the person who's still working and not yet retired. And then in retirement, we have this other risk, which is called sequence risk. And simply put, what we do when we retire is we do two things that are very important. Number one, we put a lid on the top of our retirement saving bucket. Our portfolio is now what we're going to use to live on. And here we are at the bottom of the bucket after we turn on the faucet. We're taking a steady income stream in many cases from that retirement portfolio. All of a sudden, the volatility of that portfolio matters a lot to us. So if we take on too much risk, we run the chance that we deplete the portfolio too rapidly. If there is a really negative run of returns early in retirement, there's not enough money in that portfolio to experience a subsequent recovery, and we deplete that portfolio too rapidly in retirement. So that's what I mean by those two opposing forces. On the one hand, we want to own assets that give us the ability to raise our income throughout retirement. Then on the other hand, we want to be mindful of that we don't want to take too much risk and risk running out of that portfolio depleting too early in retirement. So those are the opposing forces that we're working with in retirement. So now that we understand that, we need to now apply those concepts to a practical plan. And I'm going to share a visual of Johnny and Janie YouTube's plan that we've talked about over the course of the next number of weeks. So now we kind of have sort of a basis of how to approach these questions in terms of, okay, I want to raise my income, but I also don't want to take too much risk so that my portfolio depletes. Now we overlay those concepts onto an actual plan, and we know that in Johnny and Janie's case anyways, in those early years of retirement, those first 7 to 10 years, we're taking quite a bit of money out of the investment portfolio right here. And then as they approach age 70, we've talked about delaying taking their CPP, which you can see here. That turns on at age 70. We layered in some annuity income for them at age 70. That's going to form another portion of their income stream, old age security. And then we still have a portfolio, or excuse me, a portion of their income that's being generated from the portfolio. But what I'm illustrating here is that now we've taken these concepts of the need to raise income, the need to be mindful of sequence risk, and we now have a practical place where we need to now apply those lessons and come up with a solution for their particular situation. So we've taken the question of how to build a portfolio out of the abstract, and we've turned it into a practical place where we now need to apply those insights and come up with a plan that works for Johnny and Janie. And so I kind of highlight these questions at the bottom of the page in sort of the old framework. I would almost argue the existing framework of how people approach retirement investing is, how much return can I get? And I would challenge that to say, I think the question instead should be, how do I make my plan successful? How do I combine different investments so that I can bring my plan to successful fruition over the course of 20, 30, in Johnny and Janie's case, it's over 30 years of retirement. So that's sort of the starting point. We now understand our objectives. We now understand that we need to apply those objectives in a practical place, which is a financial plan. So in terms of action items, in each of these videos, I'm gonna give you an action item that you can take away. But I think the big action item is to sort of get something of a plan together. And if you're already working with a financial advisor, many financial advisors are using financial planning software like the planning software that I just showed you, or the output from that software, to come up with a plan. Where am I going to get my income over the course of my 30-year retirement? How much income do I need to generate from my portfolio? Only then can we start to ask the question, how do we now assemble portfolios? How do we identify products and solutions that are going to fit your particular plans? So step one would be getting a plan in place. If you want some resources for how I would construct that plan, or kind of a movement in the right direction, there's some links below that you can click on. There's sort of an offering that I put out there for people that are interested in learning more about where they're positioned for retirement, like a quick video that I put together for them, a private video that I'll send to you if you're interested in getting that kind of high-level assessment. There's a link for that below, some other resources as well. So that would be the first action item, is try to at least initiate or take the first steps to figure out what your retirement income plan needs to generate for you. And what I'm going to do now is I'm going to talk about the agenda for our next several weeks of this series, just to sort of give you an idea of where we're going with this series. So we've already talked about today objectives, the objectives of a retirement income portfolio. In the next video, I'm going to talk about sort of the three considerations for how we figure out what type of investment portfolio we need to construct. It's the ability, willingness, and need to take risk in our portfolio, which is a concept that comes from Larry Swedroe. We're going to talk quite a bit about Larry's work over the course of the series. He's an author that I follow very closely, and I really value what he's taught advisors and investors about retirement over the years. We're going to talk about asset allocation and what that means. I'm going to talk about a very simple 2-bucket system that I like to use when building portfolios for retirement. I'm going to talk about the importance of stress testing your portfolio before we set out for retirement. Then we're going to talk about investing alternatives or investment alternatives. We're going to talk about active investing versus passive or index investing. I'm going to talk about big mistakes that I see people making and how to avoid them. That might actually spread out to a couple of videos because unfortunately, a lot of what we know or a lot of what we've been told in Canada, a lot in Canada, in fact, what we've been told about and how we currently invest for retirement, I believe is wrong. And I'm going to, throughout this series, present the evidence behind why I think that there is a better way to invest and give you, the insights to sort of start to implement that on your own. And then we're going to close off the video with some advanced strategies. So things that I'm implementing day to day, which are unique to my practice. But at very least, if you don't follow everything that I talk about at the end of the series in terms of advanced strategies, at least it gives you a benchmark against which you can measure your own strategy. And hopefully you find all this to be helpful and useful for you. So again, thank you for watching this video if you've watched this far into today's video. If you like it, give it a thumbs up, leave me any questions or comments below, subscribe to the channel, hit that bell icon so that you're alerted when more videos are posted. Thanks again for watching this video, and I'll speak with you soon. Take care.